Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Lululemon stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 49 billion market cap. They're trading at $3.89 a share and they have 126 million shares outstanding. Lululemon is an athletic apparel retailer. It was founded in 1998 as a retailer of yoga pants and other yoga wear. But they have expanded to also sell athletic wear, lifestyle apparel, accessories, and personal care products. They have over 700 stores around the world. They also sell products online. And the stores are not just for women, but it seems like most of their products are women only. I've also never seen a man in the store, which implies I've been in the store. I actually been to the store several times because I used to run a math tutoring center. I'd buy a lot of prizes for the kids, and the girls loved Lululemon stuff. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow in 2021, $600 million. It grew 73% to $1 billion in 2022. It dropped a lot. It dropped 67% into 2023 at $328 million. But they blew up in 2024, $1.6 billion. It grew 400% from 2023 to 2024. And they had the highest free cash flow margin ever, 17%, which means they converted 17% of their revenue into free cash flow. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's $600 million in 2021, growing 66% to $1 billion in 2022, dropping a little in 2023, then the highest ever, $1.6 billion in 2024. Their net profit margin is 16% in 2024. It was also 16% in 2022. That implies they convert 16% of their revenue into net profit. Revenue is a sales for the company, and that goes up a lot each year from $4.4 billion to $9.6 billion. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $37 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $32.5 billion. We divide that by 126 million shares. And we get a calculated stock price of $258. They're trading at $389, so they're trading at a 51% premium. It's a really big sell according to the model. But the problem is, the stock is so hot right now, it may not come down for such a long time. So I can't recommend not to buy it, but based on the model, it seems overvalued. I know that sounds counterintuitive. There are 16 companies in the same industry as Lulu, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent $650 million in CapEx. TJX spends the most at $1.6 billion. They have a really good debt to equity ratio. For every dollar of equity, they have 30 cents of debt. TJX is really leveraged. Look at Burlington, 4.8. Lulu does not pay a dividend, but they probably will be paying one this year or next. They generate lots of free cash flow, $1.6 billion. They rank second in market cap, far behind TJX, equal to Ross. And it looks like they're trading at a pretty big premium. They're trading at 12 times book value, 32 times earnings, which is double the median, 30 times free cash flow, which is 2.5 times the median, and 5 times revenue, which is about 12 times the median. So the stock is really rich. They generate $9.6 billion of revenue, a lot less than TJX, less than half of Ross's revenue. It's also lower than Burlington and Gap. Burlington and Gap are a lot smaller in terms of market cap. But the reason people keep buying Lululemon is because they're growing more than anybody else in this industry. Their 5-year annual revenue growth rate is 24%. Lulu did one stock split in 2011, a 2-for-1. They're due for another one this year. And let me know in the comments if you were smart enough to put $10,000 into this company 10 years ago. You would have $84,000 today. That's a 24% annual return. Who would have thought Lululemon was a winner? Let's take a look at their 10K. This is their income statement. This shows us 2022, 2023, and 2024. Yes, they did complete their 2024 fiscal year. Their fiscal year ends January 31st. Look how much their revenue has grown, about 50% from 2022, 6.3 billion, getting close to 10 billion in 2024. Let's get a breakdown of the 9.6 billion so we know what it is. Of the 9.6 billion in revenue, 6.3 billion is in the US, 1.3 billion in Canada, nearly 1 billion in China, 170 million in Hong Kong, Taiwan, and Macau. And then all other regions, 850 million. So it's good to see they have stores all over the world. They also have an online platform which they can sell easily to anybody in any country. Their revenue in China grew the most. It more than doubled from 400 million to 960 million. US revenue grew about 50% from 4.3 billion to 6.3 billion. Other geographic regions doubled, 440 million to 850 million. About 65% of their revenue is women's products, 6.1 billion, 2.3 billion in men's products, and other categories, 1.2 billion. I was not expecting this, but their revenue is split between stores and online. I thought they did more revenue in stores. Below revenue is cost of goods sold. These are all the expenses directly tied to generating the revenue, like the cost to make their products, the cost to ship those products to the stores. That's 4 billion. So their gross profit is 5.6 billion. Their margins are improving a lot. It was 55% last year, now it's 58% this year. Their margins did go down from 21 to 22, but now they're better than ever, a little higher than 2021. SG&A, selling general and administrative expenses, this includes marketing, 3.4 billion. That's 35% of their revenue. Their operating income is 2.1 billion. The prior 2 years it was 1.3 billion, so that improved a lot as well. Net income 1.55 billion. That's nearly double last year's number. So their EPS is $12.23, a lot more than last year of 670, 752 before that. And their shares outstanding are going down every single year. 130 million, 128 million, 127 million. Really solid income statement. Let's take a look at the balance sheet. Current assets of 4.1 billion. Current liabilities of 1.6 billion. A really high current ratio. They have a lot of cash on their balance sheet, 2.2 billion. They also have a lot of inventory, 1.3 billion. Since they own some of their locations, they have a lot of PP&E, 1.5 billion. Here's a breakdown of the 1.5 billion. 1 billion is leasehold improvements. So when they improve the store. 1 billion of computer software. They also lease some of the assets, 1.3 billion. So instead of buying a location, they may lease it. Only 24 million of goodwill. So total assets, 7 billion, up from 5.6 billion. Total liabilities, 2.9 billion, up from 2.5 billion. The biggest liability is non-current lease liabilities. That's 1.2 billion. This is how much money they owe on the assets they lease. Assets minus liabilities equals equity. They have 4.2 billion of equity. They raise almost 600 million from selling their business, and they profited 4 billion from running their business. Such a profitable company. Let's take a look at the statement of cash flows. The first section is operating cash flow, and that was 2.3 billion, which is almost exactly equal to the prior 2 years combined. The way you calculate the 2.3 billion, you start with your net income of 1.6 billion, then you add the non-cash items on the income statement, depreciation of 379 million, an impairment of 75 million, stock-based compensation of 94 million. Then you have to adjust for changes in working capital. They had a cash inflow of 178 million from accounts payable. This means they bought on credit. But last year, they paid back 107 million, so they may have bought on credit before that and then paid for it this year. In their investing section, they spent 650 million of PP&E, similar to last year. In their financing section, they buy back lots of stock. They bought back 558 million of their own stock. Before that, 444 million. Before that, 800 million. That's why when we looked at the income statement, their shares outstanding are going down each year. Let's take a look at LULU on Simply Wall Street. Its last price, $389, 51 billion market cap. It is down a lot the past week, down 15%, but it's up 23% in the past year. Let's see what they say about the company. Lululemon designs, distributes, and retails athletic apparel, footwear, and accessories under the Lululemon brand for men and women. It offers pants, shorts, tops, and jackets for lifestyle, such as yoga, running, training, and other activities. It also provides fitness-inspired accessories. They sell their products through a chain of company-owned stores, outlets, interactive workout platforms, yoga and fitness studios, university campus retailers, and other partners. They also license their products. They sell products through their mobile app on Lululemon.com. It has operations in the US, Canada, China, Australia, South Korea, Hong Kong, Japan, New Zealand, Taiwan, Singapore, Malaysia, Macau, Thailand, and APAC, as well as the UK, Germany, France, Ireland, Spain, the Netherlands, Sweden, Norway, Switzerland, Europe, the Middle East, and Africa. They were founded in 1998, 26 years ago, headquartered in Vancouver, British Columbia, Canada. They IPO'd in 2007 at $17, and then the following year in 2008, the stock was $2.25. Sheesh, what a run-up from $2.25. It was 77 in 2012, it came down to 38 in 2014, and it broke through $100 in 2018 for the first time. Right before COVID, it was $240, then it came down to $140, and then it had a huge bull run, hitting $460 at the end of 2021. And then it regressed a lot, coming down to below $300. It peaked at the end of 2023 at over $500. But it has been coming down since then. It's below $400 currently. So even though it's overvalued, this might be the right time to buy it, because I'm not sure how much more it's going to come down. Simply Wall Street says the stock is 3% overvalued. 34 analysts priced this stock at $480. They say it's really, really undervalued. Their revenue forecast is over $13 billion by 2027. And their free cash flow forecast is $1.7 billion by 2027, which is actually where they are right now. Their free cash flow for 2024 was $1.6 billion. Look how much their revenue grew since 2013. It was $1.4 billion, and it pretty much grows every single year. It almost never declines, almost hitting $10 billion in 2024. And they are debt-free. They had no debt. They added a little bit in 2018, but then paid it off, and they've been debt-free since then. And their equity keeps going up. Look how strong their equity is, $4.2 billion. And they keep a good amount of cash on their balance sheet. Their cash reserves are at the highest level, $2.2 billion. In 2019, the CEO got $600,000, currently $1.25 million. His total compensation is $16 million. Tenure as CEO is 5.6 years. There's been some insider selling in the past 12 months, no insider buying. 88% of the company is held by institutions, 4% by private companies, 4% by the general public, and 4% by insiders. Their biggest shareholder is Fidelity at 14%, then Vanguard, BlackRock, and State Street. Then Enamored owns 4%. Chip Wilson runs Enamored. This is an investment vehicle. Chip Wilson is the founder of Lululemon. And then you see AllianceBernstein, T. Rowe Price, BNY Mellon, Northern Trust, JP Morgan, TII-CREF. They employ lots of people. It's gone up from 7,600 in 2014 to 38,000 currently. And the ticker trades on the Nasdaq, Deutsche Börse, Zicha, London Stock Exchange, Mexican Bolsa, Wiener Börse, Sao Paulo Bolsa, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.